Hello, my name is Jack Warner with the Winning with Money program. Today we are on lesson 4, strategies to manage debt, part of step 3, paying off debt. So in order for us to pay off debt, we have to collect our financial information. We have to understand our whole entire financial big picture. So we can organize all of our outstanding debt by printing them off from the website or from our bank account or whatever it might be, or we can organize it all into an Excel sheet, whichever you prefer. This should include the balance owed, interest rates, any terms that we can find. Go to the library, usually there's somebody there that can help you in the resource office. Try to find every bit of outstanding debt that you owe money on and start organizing it. With this, you want to list all lenders you owe money to and contact them, or at least get their contact information. So this should include all student loans, store cards, credit cards, auto loans, personal loans, even throw the mortgage in there if it's applicable for you. But keep that separate. So you want to keep all your consumer loans in one area and then your mortgage and maybe business loans in a different category. So collect all the information from the lenders and their contact info, especially if that debt is huge or if you have a large interest with it. And we're going to talk about how we can negotiate a payoff or a better loan schedule or interest rate later on. Add your debt obligation as a budgeted item. So analyze your budgeted income. Add your debt obligations as a budgeted item. Start thinking of ways to save. Consider your income level and see if it's adequate enough to handle the debt load that you are currently facing. And the last thing is maybe look into debt consolidation. This is usually kind of a not quite a last resort, but a step before the last resort because there are some pros and cons to debt consolidation that we'll get into later. But debt consolidation would be a great way for people to organize all their loans in one area, one company, and that way they're only making one payment a month. And there's some great ones out there. National Debt Relief is one, Lending Tree, Upstart. There's a bunch. So debt consolidation benefits. We're gonna get into the benefits. So again, this isn't the right choice for everybody. So you need to sit down and seriously consider, like, should I spend my time and money even, because some of these you have to pay these people an extra fee on top of the interest that you had to pay. And you need to consider, is this the right thing for me? And I'm going to go through the benefits first. Usually I kind of go through the negatives first, but I'm going to go through the benefits of debt consolidation first. Benefits, easy to manage because it's all one payment. So if you don't know what debt consolidation is, say I have 5 loans out there and I need to get them paid off quickly and I just can't keep track of all the contact information, I can call a debt consolidation company. There will be some kind of consulting process with them, and then I'll start giving them all my financial information, and then they'll contact all the different lenders that I owe money to, and they'll start managing, and they'll pay them off a fee. I have to pay them a fee. This is how it all works. But it does make it easy. Instead of making 5 different payments throughout the month, I only make one payment to that debt consolidation company. Another benefit, usually I can negotiate a lower interest rate compared to my already existing lines of credit. And of course, if I stay on top of this, it can result in a faster debt payoff. And there's some other minor benefits too, but these are the 3 major ones. But beware of, some people get sold on this debt consolidation. Some of it's kind of a scheme. Not all of it is. There's some good to it. I just showed the good. But beware of consolidation fees. Some of them are extremely high. I think National Debt Relief is one of the best. Again, I'm not sponsored by them, but if that's the route you need to go, I would just look into all the different fees that you might want to consider before getting into it. And sometimes you have to do a credit balance transfer from your credit company or the debt consolidation company or both. Do the calculations. Are you really saving? You can have it mapped out for several years, and 3 years, say that's your payoff schedule. You know, how much are you really saving? Is it worth doing all this if you can just keep track with what you owe? You do not need it if you only have 1 or 2 lines of credit. So it's not that important, because it's no point if most people can handle 1 or 2 lines of credit. So if you only have 1 or 2, it's not that big of a deal. I wouldn't suggest using debt consolidation companies. You do not need if you pay off your debts in less than 2 years. So if you map it out and you can stay on that schedule, you have it on the budget. I can pay this off in 2 years. You do not need debt consolidation because usually you can handle that on your own. And for most debt consolidation companies, you got to have a decent credit score. So if you're in that subprime category, it depends on the company, but under 600, 650, you probably won't be able to get into their debt consolidation program. So that's the pros and cons of debt consolidation. Again, a viable option for some people. For most people, I would say no. And you cannot stick to a budget. That's another important beware of for debt consolidation. If you can't stick to a budget, this is probably not right for you. So budget income, I said earlier in the first part of this lesson that we need to focus on our budget and income. Can I increase income? Are there ways for me to increase income? So say I don't need to do debt consolidation. I don't need to do any extra budgeting. I just need to make a little more extra money. And that's valid. In fact, that's probably one of the, maybe besides budgeting, that's one of the most powerful tools you have at your disposal. Pick up some side hustles, some side gigs. Ask if you can work more hours at work. Ask for a raise. Do odd jobs. There are ways to find income in this world to help us get out of debt and reach our financial goals. Create a new budget. Maybe your old budget's not working. Delete it. Change your app. Delete the spreadsheet. Whatever it is. Create, or for some people, finally start a budget that includes your debt obligations. And then use a budget to find areas where you can save to reallocate funding towards your debt obligations. So find new ways to save. And sacrifice. There's going to be some time and money that you might have to sacrifice to achieve some goals. So getting more into debt settlement, this is why I told you all in the beginning of this lesson that we should collect all the information from our lenders. So easy way to do this, you get all the different credit cards or student loans or mortgage, whatever you have, auto loans. You list all their contact information. And if you are in a very serious financial troubling area in your life, sometimes you can call the debt collection agency, see where they would be willing to work with you, and then offer them like, hey, I know I owe $10,000, but I only have $6,000 I can give you. I'll write the check today if you can just accept this, and have it in writing too. That's very, very important. Have it in writing, have them send this to you and all, and get their manager to sign off on it. And sometimes they'll accept it. They'll accept the one-time fee that guarantees $6,000 rather than having to go months and months and months without you paying, and then they're then not collecting anything. So sometimes they can be reasonable, and you can settle out your debt and then totally eliminate that debt. It doesn't hurt to ask, right? Like, all the worst they can say is no. If they say no, ask them again later on and see where you can get to. If you've gone through all the other processes, you've settled the debt, you've called them, you're doing all the budgeting, you've earned more money, you've increased your income, and you still can't get by. I mean, you can't even see the end of the tunnel there. You're totally swamped with debt. Bankruptcy might be the last option for you, and this is the dead last case scenario for us. Filing bankruptcy, what it does, it's a court case. It's a long process. It can take years, even months at quickest, half a year maybe, but usually it takes, especially during COVID, it took 2 or 3 years on average for many bankruptcy cases. And this is just individual family cases. So filing bankruptcy, it wipes all your debts clean, either entirely, I should disclaim that, either entirely or set certain amounts or a certain time frame where your credit is put on hold. That all depends on Chapter 7, Chapter 11, different types of bankruptcy, the court case, etc., leniency of the judge. What happens, though, usually is your credit is destroyed no matter what. Once you enter into bankruptcy, your credit is destroyed. All your debt payments are placed on hold. Bankruptcy, it's a long process, and it's risky too, because you may or may not get a good decision made by the judge. They might just overlook it and say, no, that person can handle it, and they might go against you, and then you have to pay the attorney fees and the court fees, and then not to mention the emotionally draining process of just going to court anyway and getting all the lawyers involved. So bankruptcy is a long process. Last case scenario, it's too much for a lot of people. But again, if you are seriously considering, you've done everything else you know what to do, there are some bankruptcy attorneys out there and some counselors that you should talk to and get consulting advice from before you move into this process. In almost all my lessons, I always tell people to get advice, because we need help as humans in every aspect of our lives. We need help. Get involved with credit counselors, hire a financial coach, or find a mentor that you know is good with their money. and try to get advice from them and help them guide you through this financial process. And the last thing we can focus on, and a lot of people forget about, is making larger payments. As simple as that. Make larger payments, even if it's only $5 to $100 more on your loans. Try to make larger payments to pay off these loans. Don't pay the minimum. Refuse to pay the minimum. Try to make larger payments towards your debt, because even the smaller payments can be super beneficial. Bonus points, you get bonus points for making payments above the monthly balance if you can't fit in the budget. So they usually have a minimum, then the balance, and then even higher, the premium balance, and then you can make as much as you want on payments. So say your minimum is $25, the balance owed is $100 for that month, but you have $10,000 outstanding debt with that. Try to make $200 or even $105, whatever you can do to fit in your budget. Try to make those payments larger each month. The next video, we're going to take a deep dive into specific individualized strategies, really two methods, I should say, two methods of how people decide and advise on paying off debt. We're going to compare and contrast these two main methods of paying off debt. That's going to be the snowball effect and the avalanche method. I will talk to you all then.